Okay. So I'm going to be doing this live session for everybody. I see that a lot of people have been struggling with certain concepts and or struggling to visualize certain concepts. So I'm actually going to take a second and I'm going to let you guys visualize it while I'm showing it to you guys on the chart. So firstly, this is going to be very student interactive. So make sure you guys are either in the chat. Yeah, make sure you guys are in the chat. Firstly, what pair would you guys like me to go over first? Euro USD. Okay. Okay. Awesome. So let's go ahead and talk about this pair. So Euro USD. Firstly, I want to make a quick note to everybody. Tomorrow is the inauguration of the 46th president, right? And that's going to be extremely, extremely impactful on the dollar, which we should note here that is going to be the comparison currency of Euro USD, right? So we have to realize that at this point, the market is going to be like there's going to be a lot of institutional manipulation for the market. Whether that be a bullish dollar or whether that not be a bullish dollar, whatever happens in the market, it's going to be very, very, first of all, volatile, which means that if we are to input trades this week, then I suggest a little bit larger of a stop loss, right? Now, firstly, we have a gap. This gap on a Tuesday can be very telling of where the market's going. So if we look at this on the if we look at this on the 4 hour, it sort of looks like accumulation, right? This looks mostly like accumulation. We have our first consolidation, right? We have our second point where the range is getting somewhat established, right? Then we have this break of structure. Then we come back up and we retest previous structure, right? And then we come down and give ourselves a test. So from here, we could find a point of interest around this area, around this inefficiency. We could get another point of interest around here. So either way, whichever one of the two we actually try to go for, let's highlight them on the, let's highlight them here and let's highlight them here, right? So that when we go on the lower time frames, we understand what's going on. And this firstly, we also have to notice that this previous piece of structure, this wick was to mitigate these movements here. But then furthermore, when it goes up, we see that structure hasn't completely been broken on the higher time frames, but on the lower time frames, meaning these previous highs, they definitely have been. So let's actually go down into lower time frames on the 2 hour. So on the 2 hour, we have this order block in which this order block was missed by a little bit. That definitely could be a point of interest, right? We could also have a retail trend line here, so we could have a taking of liquidity here too, right? If people aren't familiar with the retail trend line, they look something like that, right? And from here, we could be breaking structure, coming back to an order block, taking this previous liquidity and this previous liquidity, and then shooting up. So I'd have 2 points. I'd have 2 points of entry. Firstly, I'd have this one right here, right? If this one is broken, then more than likely we're going to be taking this liquidity and going lower. So then my second point of entry, which would be the test entry here, or sorry, the LPSY entry, would be on this order block, which is a valid order block because firstly, it filled this 50% of this inefficiency and it also hit this mitigation block. And then from there, it continued going up with complete bullish order flow. So now, since we've made a move upward, we've hit equal highs, we can still hold this bullish tendency that's on the local time frame. Okay, so there's a big difference between a local time frame and like an external range. So this external range, which would be on the 4 hour, right, which would be saying essentially this, right? Is reaching these highs and stuff. What would be happening is now we're focusing on local local price action or local time frame, which would be here. Okay. So even though we're looking at a larger move, right? we are also looking at this local price action, and that's something that you guys should be doing. So this right here, we're going to mark with a little eyeball, right? We're going to say, well, most likely something is happening here, so we're going to write that down. Now, I think that this trend line was broken, and from there is going to go down to this area. The reason for that is simply because this still has a bullish tendency, and it still has bullish order flow. However, we do have to take the liquidity that's found here in this liquidity pool and here in this liquidity pool. There was very little institutional sponsorship from here, and actually, I believe I don't have the volume indicator because it's kind of clumsy, but the volume indicator here would spike there, so there was a gap. The gap was filled in. This right here, I don't think it actually ever, like, I don't think this ever really was triggered. I don't really think this order block was triggered. And because of that, I'm going to hold this order block still. Now, if we go on to another time frame, that I could be wrong. No, see, I don't really think I'm wrong here, because then here we could also take the 50% of this inefficient candle. That'd still be fine. We'd take it, it hit there, and then it continue upward, right? That's what I personally would think. So if we go back down to the 2 hour, I think this here would be placed around either 50%, right, or a little bit lower. Now, if we go to the 1 hour and we see what's up on the 1 hour, we see the same exact thing. So there's no, that's one of the biggest things that a lot of people have trouble with, is identifying an order block on multiple time frames. And that's because a lot of people, like, there's correlating time frames, right? So the 4 hour will correlate to the 1 hour. Sorry, to the 4 hour will correlate to the 8. The 6 will correlate to the 12, right? And like the 2 will correlate to the 4. That's why you see me a lot. That's why you see me going from the 2 hour to the 4 hour a lot, because a lot of times the 2 hour shows stuff that the 4 hour may not show very clearly, and it shows it more so in detail, right? Or the 1 hour will show a lot of things that the 2 hour doesn't show in detail. So with the 2 hour, what I like to do is I like to split that up into tradable timeframes, and I like to look at my local price action. So here, I'm definitely looking for this liquidity, this stop, this run on stops here, and another run on stops here. 2 places, and then here we can get our entry. So from there, I think we could even risk it from there to there and just, take this like so. There you go. Yeah. So right around there could be our entry, and we could, take the trade from that position. Now, if we look at this, right, the dollar has been consolidating over the past week. That's why a lot of people have been saying, well, why is the dollar so, so weird? Why is the market so weird? It's simply because the dollar is consolidating. So if we see what the dollar is doing, right, and we literally flip it over, is there the comparison one? Yeah, the compare. So this one, let's say we compare this to the dollar index. What do we see? We see the exact same thing, but upside down, right? We see the exact same thing, but upside down. So because of that, hold on. Um, yeah. So you guys see this, right? Wherever the top of the euro of the EU was, that's the bottom of the dollar. Wherever the next line of the euro comes in, that's also where the next line of the dollar comes in. You see where this retracement happens? It also happens on the retracement on the dollar index. So that's something known as smart money divergence. That's something that I've also covered in my boot camps, and that's also something that I covered last class. So if you guys don't know it, essentially, if you backtest, GU, EU, a lot of major pairs, they follow this tendency, but the one who follows it the most is Euro USD and GBP USD, because they're the biggest currencies in the world, right? So if we look at this, we see that it's almost exactly the inverse, right? The same spike and wick that happens right here, it also happened right here, right? The same retracement that happened here also happened here. The same retracement that happens here also happened here, right? So it's inversely correlated. right? Inversely correlated means that it's the opposite. So what can we assume about this? We can assume that our analysis for the dollar is going to be extremely useful for analyzing the euro. Because of that, we're going to be saying, okay, well, to any USD or major USD pair, I'm going to be looking at the strength or the currency index of the dollar. Right now, I think there's most likely accumulation for at least a short-term retrace upward. I still think the dollar is bearish, but that won't matter for this situation, right? What am I going to do? Well, I'm going to take this point of interest in mind, and I'm going to see if I can find a similar point of interest on lower time frames as well. Let's go to the 2 hour and let's see what's going on. Well, here we know that it breaks a previous low and another previous low, so it broke two previous lows. Here we can assume that it would probably break two previous highs, right? So it would be here and here. Did everybody understand that? So on the DXY, right, we most likely have to break past two equal lows to get to the point of interest that we have. Here, we would do the inverse, the exact inverse, and we would go past two equal highs, right? So where would our point of interest be? More than likely, it would be around here, right? And if we look at it from a pip perspective, well, let's go ahead and see the short position here. I don't like those odds. That's a 30 pip stop. I don't like it much. And then our entry would be there, right? For this to be valid distribution, right? Also, we see that we've reached equal lows, which means that we've also created liquidity below, right? So since we've created liquidity below, boom, there we go. There you have it, right? We have an actual liquidity pool target. So we know that EU is going to go down here, right? We know that most likely it's going to go down there. However, I've also been looking at a lot of news and different things that I've been looking for. If you guys are very tapped in, you guys can find that there's a lot of news sources that actually allow us to look at what banks are having for their predictions. Um, a lot of banks are actually predicting. Let me actually see if I can find the source. Right. So the Goldman Sachs forecast for Euro USD, they predict by March we're gonna have 125. So 125 for Euro USD is up here, right? This is 125. So we can go ahead and say, like the horizontal line at 125 would be around here, right? Boom. There we are. Let's actually coordinate Euro. Boom. There you go. Right. So that's the actual target for Goldman Sachs by March, right? But that also means that they have a whole almost 2 months to get up there. So if we were to look at this from a larger time frame perspective, we have a lot of liquidity right here that we can go back and take, right? We could at least return to this position, which to us is good because we can, catch a couple hundred pips on the way down. And then from there we can ride it on the way back up, which is the same thing for the DXY. Does the DXY support this theory? More than likely it does. More than likely it does. Let's say it rejects off of this area, it comes back up and it taps this breaker block right here, right? So this breaker could easily be tapped later on, and boom, we can continue on lower, right? So that would be a higher time frame sort of entry because we never actually retested it, right? We just kind of blew past it. We never came back and retested it. So I'd actually like to see what's going on here and see if we can come back and do it again and hit it one more time before we continue on lower. And yeah, here's a wick. So more than likely, we're going to have a position where this breaker block is retested. And from there, we can continue on lower. But for that, we need to accumulate and go higher, right? So same thing here. I think that's a pretty solid prediction for what's going to happen. This order block is going to be my point of interest. And for EU, it's going to be the same exact thing, just inverted, right? So we're gonna have something like this, right? That's what I predict. And that's what I would like to see, right? I would like to see EU reject off of this after taking two pieces of liquidity. I expect a weird dollar for the next couple hours, right? Because once January 20th happens and the inauguration happens, Well, then we are in uncertain waters, right? It could completely blast past that stop loss, which is very probable. However, I would like to think that it won't do that. um, However, remember that tomorrow we are in unknown territory, right? Tomorrow cannot confidently tell you, hey, the market's going to move here and then it's going to reject immediately off, right? Because of the inauguration is going to be something that's extremely difficult to predict, and that's simply because one, we've never had a presidency like this in our time, at least from my knowledge of trading, right? And also, with this new Biden presidency, there's a lot of uncertainty within the dollar, whether that be from the stimulus checks that he plans to roll out, and also, if the foreboding of the bearish gold and bearish precious metals that we've been seeing recently, well, that could be a pretty dark indicator. However, I personally think that this inauguration is going to be a piece of propaganda for banks to use to simply manipulate the market, gain liquidity, and from there on, gain liquidity to move higher. I'm going to stop and read the chat really quickly. I was thinking to sell Euro USD from the first peak that you have marked. Is that not correct? From this peak right here. Okay, so this peak right here, I personally wouldn't. There's still liquidity above it, right? We never came back and retested these highs. So I personally think that the clearest one here is this one because it actually retested this breaker block here. So we actually took a short off this position, right? And then we can take it again after we retest this, right? So me personally, I think there's still liquidity above it for it to just continue dropping like that. And if it does, that's fine. But if it does, that's fine. But that's just not my point of interest. Now, if we would go to the 15 minute and we would stay on the 15 minute, then a lot of people would like to say, well, here's an inefficiency. Let me just, like 50% it. And that wouldn't be completely wrong. But usually, when we take inefficiencies like these, there is either a liquidity void behind it, which means that it's going to continue on lower, or there is nothing in terms of structure behind it. Because you see this, then this is no longer an inefficient candle. This here was something that tried to come back up and mitigate something in the back here, right? That's just how the algorithm priced it. There was some major movement here that happened, and it blasted price temporarily higher. Retrace continued lower, most likely a limit trigger or something else that the algorithm was pricing in. So because of that, I still think there's liquidity above it. So even on the 15 minute, I wouldn't agree with the sell on there. I would agree more so with the sell up here. What exactly are you looking for from the inauguration to say it's bullish or bearish? Like if you were actually watching it on the news. I'll get back to you on that really quickly. And on the weekly, do you think it will eventually hit 1.4 liquidity? With all losing value of the US dollar from printing billions and billions of dollars over the next few months. Yes. So actually, what I've been talking about in my podcast recently is that recently we've seen this huge amount of stimulus in printing, right? And this huge amount of stimulus in printing ends up happening because of the Fed, right? The Fed can still print whatever they like whenever they like. So because of that, they're going to abuse that power. So in that case, yes, the dollar will most likely lose value because we're also expecting another what, $2,000 stimulus check. This next $2,000 stimulus check could really just seal the deal for the dollar, right? And also, if you look at, and this is actually something I'm going to speak on my podcast tomorrow about the prices of wheat and corn, right? So if we look at wheat futures, or if we look at corn, or if we look at these other different commodities, if we look at corn futures, we're actually going to see something pretty interesting. Oh, whoops! Whoa, my browser just crashed. I apologize. Um, Let me reshare my screen. Where can you tune into the podcast? You can tune into the podcast. Um, you can tune into the podcast in Empire Trade Group on YouTube. Right. If you tap into Empire Trade Group on YouTube, if you just look them up, I also sent the link in the Discord chat, in the discussion chat. That's my second episode about the truth of cryptocurrency. That's something I think you guys would like. It's actually here. I'll send it in the chat as well. You can tune into the podcast every Monday, Wednesday, and Friday, and I will drop the link. It's not live. I will drop the link of the recording. Um, but either way, if we look back, right, and we see, corn, if we see, oh, whoops, hold on. If we see the price of corn, right, if we see the price of wheat futures, look at how much this rose over the past couple weeks. Look at this. This is classic distribution. Sorry, accumulation. Right? Wheat futures are in classic accumulation. If this is not a telling, right, of what's going to happen to the dollar, I really don't know what is. Right? Because one contract is expensive of wheat futures, right? So if we look at what's happening with wheat, and we also look at what's happening with corn, all stuff that are all foodstuffs that are actually valued against the dollar, these futures are going to increase in price. What does that mean for the dollar? Well, that means that for the dollar, it's going to take more dollars to buy one of these, which means that there's going to be increase in food pricing, right? There's going to be increase in commodity pricing and technology pricing, right? Because if gold is going to rise, then more than likely, what's going to happen to the technology that relies on gold, like watches, like jewelry, right? Like a lot of technology. What's going to happen? More than likely, it's going to go up. Same thing with silver. Same thing with copper. A lot of industrial solutions and industrial metals actually rely on copper, right? And right now, actually, in my backyard, I have a giant stack of copper, right? Of just solid copper, copper lancets, copper sheets, copper coils, chopped up copper, copper wires. I bought a machine that actually strips the wire, strips the plastic outside of the wire for the like from the inside, and it takes the inside rod that is completely pure copper, and it takes it out, right? So if you guys have copper wiring, I suggest, or like copper wires in like en masse, I would suggest you guys to strip it, or for you guys to get one of these machines that you just pass the wire through it and it immediately cuts it. Make those copper coils and go sell them at scrap places. That gives you a pretty hefty amount of cash, if you have enough of it. Now we're just looking at wheat, right? And we're just talking about the dollar. So wheat, right? And corn. Look at corn. Look at corn. Same thing, right? Recent spike. Recent spike. Now, what's happening with this recent spike? This recent spike, I can guarantee you, it probably matches up about the same time when the dollar started going all wonky, right? When it started going all wonky, more than likely, look at where corn goes. Boom, right? It starts going up. Now, of course, this doesn't mean that we've reached the previous high, right, which is of 2012. But a lot of these futures have been going up, especially I'm especially bullish on U.S. oil, right? You guys don't think that that once this domestic, this domestic lockdown is over, people are going to start using a lot of a lot of cars, right? Industries are going to start back up, stuff like that. But more than anything, the dollar is going to be valued at such a time that is going to be worse than the 2008 recession, in my opinion. But if you guys see how bullish oil has been, literally how bullish oil has been over the past couple of months, if you guys see this, that's insane, right? And that all has to do with the dollar, right? That all has to do with how the dollar has been reacting recently. So me personally, I think we can even find a an entry on U.S. oil and try to see what's going on here, right? We can try and see something going on here, and then lifting off from this order block, I suppose, or somewhere else. But we'll analyze these later on. Now, now that we're done talking about that, I think I've analyzed Euro USD in a little bit of a comprehensive way. Did that help everybody? I hope that did. I hope that gave you guys a little bit of a new light. Okay. Is there any other pairs that would you guys would like to see looked over? GA? Yes, no problem. GA and GJ, no problem. Let's go to GA. So GBP AUD and GBP JPY. Let's go over there. And USD CAD, sure. Now remember that Mustafa's also having his trading session in a little bit. So, well, you know, at 3 in the morning, but still. Do you guys think you guys would like what do you guys think you guys get more value out of? Straight up classes or live sessions? Like would you guys like to see more live sessions during Asia, right? Like during Asia time, like now? Or, you know, earlier, like around 7, 8 Eastern? What do you guys think? Both? Okay. Awesome. You prefer lessons? All right. Now let's actually look at USD CAD. On EU, the order block that you marked, there's no liquidity to the peak prior to it. I get confused and to identify liquidity areas previously. So liquidity can be defined as a lot of things, right? So a lot of people define it as the previous highs, right? I personally define it as, is there any reason for banks to go above it and, you know, come back to these limit orders that they have up here? Well, right now we know that a lot of people have been going short from this position, right? There's a lot of people going short here, here from breakouts. Right now, they just got stopped out. So if they're taking stop losses here, right, people are still holding on there. Some people are buying, right? So what are they going to do? More than likely, they're going to take this liquidity, then retrace again, right, and then come back up and take this liquidity again. So think of it kind of like a pool, right? Think of it kind of like a pool. And I actually did a class on this. I don't know if you were on it, but yeah, I essentially did a class on liquidity pools and how those pools can be identified easily. They can be identified by ranges, you know, that have a top. Like for example, here, this here would be the liquidity pool. This here is going to be the liquidity pool because there's still something, there's still a piece of structure above it that hasn't been mitigated, basically. So we see this order block that hasn't been mitigated, and we kind of come back to this point and we say, well, there's nothing here that I see, right? That has been that has mitigated that order block. So because of that, I can assume that more than likely there is liquidity there, right? There more than likely is liquidity there, right up here, right? So think of it like a pool above the previous high or the previous low. And then another way that you can think about it is think about it like a bank, right? So let's say you take this point and you say, well, I know that a lot of people are going to be going short off of this position, you know, off of the breakout, off of the trend line, whatever the case may be. A lot of people are getting stopped out here. So why would banks come back? Well, they're going to come back here, right? Because of this, right? What are they thinking? Oh, well, now it's going to come back and retest, right? And when is that going to retest? That retest is never going to happen. So a lot of people are going to change their bias and say, okay, I'm going to go bullish. Well, from here, yeah, you might go bullish. And tomorrow may be, you know, like the whole push that it needs. But there's only 100 pips. The market can move, you know, 500 pips in a month. If you guys have had more than a year of trading, you guys should know how the July, you know, the June, July markets go. The June, July markets, they go crazy. They go 600 pips in a day, right? Sometimes. Obviously, I'm exaggerating, but you know they move a lot faster. And usually, right, in the seasonal tendencies, January, the first 2 3 weeks of January are very slow because banks are trying to capture liquidity and consolidate as discreetly as they possibly can, while people are still recovering, you know, going back to their jobs, stuff like that, so that they can actually, uh, you know, express liquidity and express and distribute the profits. When banks get long, are there retracement positions where they're closing their positions? It can be. However, that has more so to do with the algorithm, right? So the like I explained in the origin of Is a liquidity pool recording available on the site? It is available on the site, and it also is available here. It's also available in, hold on, sources. Yeah, and yeah, origin of institutional sponsorship. This was a little bit of a larger class, so please, I'm sorry if it's like 2 hours long, but I think it would help you a lot. I just sent it in the chat. I bought EU at the accumulation where your TP is. Oh, nice, nice. That, yeah, no, yes, that is definitely valid. I can see it from here. Nice. You probably did it on lower time frames. Yeah, yeah, definitely valid. That's lower time frame Wyckoff. Yep, definitely. Here's the break of structure. Here's the break of structure, right? Retest of the break of structure, retest of this breaker, which on the 10-minute, this would have been easy. Right, on the 10-minute, perfect. You see this right here? So this right here, these two candles would have been your breaker. What do you see after the breaking out? You see the retest of the breaker. So your entry could have been anywhere from here, and your stop loss should have been somewhere around there. Still 5 pips, right? And your first take profit should have been at the end of the liquidity void right here. And then you would have just let the rest of your profits run off of this breaker. Right? So it breaks previous lows, it goes back up, takes liquidity, and then it retraces to the origin of the breaker. Right? Perfect. Yeah, I agree with you. Yeah, I think that accumulation was very smart. And if you prefer to do, lower time frames, by all means, guys, by all means, go on your lower time frames and abuse your lower time frames. The reason why I don't use lower time frames as much and I prefer higher time frames is because for me the image is clearer on higher time frames. However, if you wanna, just completely go crazy and start, taking entries like this. But the thing is, Wishmore, I've seen you take these entries consistently ever since you joined the group. So that's something that you like and that's something that you specialize. So what I always encourage my students is, if you have something, use this as a basis, right? Use this as a guideline. So obviously, don't go following retail ideologies, or you will. This is a retail. This is an ideology that is technically, not. Um, how do I say this? Smart money is a school of thought, right? So just because I teach you like this is the order block, this is this, this is this, this is this, use that as a foundation and build your own house, right? Use that as a foundation, build your own house, and start back testing yourself, right? I can't transfer every bit of experience that I have, no matter how much money you pay, right? Or no matter how free the content is. No teacher can do that, right? No teacher can transfer every single bit of information in their brain to you. That will come down to you and your practice, right? So what's going to happen here? Wishmore, and I'm sorry if I'm making a bit of an example, but like I've seen you do this more than once. That's why I'm using you as an example, because you are consistent with this, right? So with lower time frame, he identified the lower time frame Wyckoff. I don't know where he entered, but he could have easily said, well, in my opinion, I would have entered off the breaker. Okay, I have this breaker. Boom, I enter. Boom, break a structure. We're good, right? However, for somebody else, they may say, I don't like lower time frames, right? And in Wishmore's case, he loves lower time frames. I may not teach him directly how to use lower time frames, but he's using the theory that the market price is fractal, right? Meaning that what happens on lower time frames also is expressed in higher time frames. So what is he going to say? Well, I know that if this was the 4-hour chart, this is exactly what I would be doing. He treats the 10-minute like a 4-hour chart, and he likes it and he does it that way. And you know what? It brings in money. So if it brings in money, who are we to judge? Right? We're here to see you guys succeed. So if you guys feel like, you may want to add your own spin to it, or you may add, don't reinvent the wheel too much, right? Don't try to find your own types of order blocks or try to find your own type of whatever, right? Or try to mix and match ideologies. What I do suggest you to do is to get creative, right? And backtest, or take a little bit of a journal, right? Take a small book, or small notebook, and start writing down what happens every trade, or start memorizing how they look, because the market will do the same thing over and over and over and over. And I know that a lot of people have been wanting to see, how I trade or how I think of things. I can't transfer every bit of experience that I have to you, right? But what I can do is I can tell you, hey, this is accumulation. I've seen this before. right? I can tell you that on many different pairs, I've seen many different things that you'll look at and you'll say, well, this seems familiar. For example, like on gold, like or like this, right? I've seen so many trend lines just get absolutely destroyed, come back to an order block and then shoot, right? Like nothing happened, and then people are retailers just sitting there confused, like what's going on? The order block is a large candle counter to the trend. No. So I have a very good explanation of what an order block is in my previous classes. Um, this is the beginner class. No, this is so the beginner class happened a couple hours ago. This is I'm filling in for Mustafa because he had something come up, and I'm doing a live trading session right now. I will go over what a order block is. Right? Would you guys like me to go over what an order block is, like a refresher on what an order block is, or would you guys like for me to keep marking up charts? Up to you guys. What would you guys like? The explanation or the charts? Do you only focus on the order block, breaker block? Well, I also focus on the. Well, I haven't taught them yet because I feel like a lot of people haven't quite mastered the order block and the breaker block yet. Um, like the king order block. Well, I don't know what a king order block is, but there are different. So I don't classify order blocks as different. They're still an order block. It's just how it looks after the algorithm prices it in. It still has to have a criteria that it fills, if that makes sense, right? It still has to have criteria that it fills. So because of that, that's going to be something that is extremely important to learn, and I'm going to go over it after I mark up these last three charts that I promised these other guys that I would mark up. So give me just one moment. Um, and there are other ones like vacuum blocks, like reclaimed blocks, remitigated blocks, mitigation blocks, stuff like that do exist, but I haven't taught them yet because, well, one, they're very advanced, and two, they're just they're well, how do I say this? I feel like a lot of people haven't really even mastered the order block yet. So I feel like if me going into like a vacuum block or going into a reclaimed block, I feel like that's just going to confuse a lot of people. All right, give me one moment. Let's go to GA. So actually, GA is very interesting to me because GA, I have a couple things that I'd like to see from it. Firstly, I would like to see what is going on here, right? Because here in lower time frames, this is an order block, or it looks like an order block. I just don't really trust it because of this right here, right? So this here touched back, right? It remitigated this liquidity void, and then it came back and broke this equal high. Breaking this equal high here is a little bit confusing because, for one, it could definitely be creating, like a redistribution. It could definitely be creating redistribution, but it could also mean that price would be heading in a bullish direction. However, then we continue and we take out the previous low. So once we take out this previous low, my bias kind of shifts a little bit because I'm thinking, well, we actually did dip into this liquidity pool and we actually created a new low. So we may more than likely have a new low, right? That is most definitely going to be something that allows our trade to go lower. However, we could also figure that this is a market maker buy model, right? So we could, have the entry over here, which would be our target, right? The consolidation, reaccumulation. Oh, sorry, accumulation, reaccumulation. Now we could have a reaccumulation, right? So what more than likely can happen if we have, the 1 or the 2 hour chart popped up. Let's actually trade the 2 hour because I like the 2 hour a little bit better. We have this 2-hour chart here. See, I actually don't like it. I don't like it much. Don't like it much. What I think more than likely can happen, and this is something that I think I'm going to take personally, is I think it's going to be similar to what EU is doing or GU could be doing too. So we have this trend line, we have this retail trend line phantom, right? And from here, we know that more than likely we're going to be heading up towards this area. I don't see it going past. I don't see it going past it, and maybe it will. But at that point, I shouldn't even be trading if I'm having doubts. Because right here, I don't see a point of interest. I don't see anything here. So what I'm going to be looking at is more than likely I'm going to be looking at something around this area. Right? More than likely I'm going to be looking at something around this area. Why? Well, we have an order block here. We take the liquidity of these two previous lows, right? So these two previous lows here, boom, we get the liquidity out of their moves, right? We get the liquidity out of their moves. And then from there, we have enough liquidity as a bank, right, to move higher. Then we could take the liquidity pool that's up here. Right around there. So can you do an example of an order block on a higher time frame and then look at it from a lower time frame for entry? Yes. Give me one moment. Where on GA would it have to break for you to look for sales? Um, that's a tricky question because okay, so let me put it this way. In smart money, we normally want to buy into a sell and sell into a buy. I don't want it to break anywhere for me to look for sells. I would like to have a sell point of entry or point of interest, which here I have two very rough ones. I have one here, which was, an inefficiency. It got filled 50% in. So this is already invalidated, right? And then we have this one, which to me isn't really valid either because it looks like we have a liquidity pool here, right? So in both scenarios, I don't see a sell point of interest. Because of that, that's why I'm looking for a bullish point of interest, which is here, in my opinion. And one of the biggest things that I had trouble with when I was first learning actually was, very honestly, was trying to get out of the sell mindset. Because the market will go faster towards the sell side than to the buy side. Well, let me reword that. The market has a selling tendency, right? It's very it's yeah, and sometimes yeah, exactly. Sometimes we're in a one track mindset because we're just like sell, 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 sell. And sometimes we see a lot more sells than we do buys and we're trying to force one setup, right? Or because the market has been going in one direction for so long, we just say like, oh, sell, 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 or buy, 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 right? For me, it was such a alien concept to actually send a buy, right? Or like get into a buy because I just did it so rarely. And because of that, I just said, well, no, I have to change my mindset and I have to realize that I am not going to be, just taking orders whenever, right? I have to analyze the trade and it has to match my criteria for me to actually enter this trade. So furthermore, we're going to be looking, so now that we saw GA, right? I think that more than likely we're going to be looking bullish on GA. Possibly we could sell at London, right, and reverse in New York. It's a 30 pip stop. It's still a little high for me. I really, I really dislike GA for one specific reason. And the specific reason is really that its pip count is so high, right? Its pip count is so high. If we kind of measure this geometrically, and we looked at, EU on the same time frame, which is what it's on the 2 hour. So if we look at it on the 2 hour, a move like this large, it would be like at most 100 pips, but here it's almost 200, almost 200 pips. So I think GA just has that one downside that it had like its pip count is so high that you have to go for position almost every single time. So we can cut down our risk and go for the 50% of the order block, but I'd rather be in the trade rather than out of it. So I'm just gonna stick with my guns there. So I'm gonna be taking that there. The next one would be GBP JPY. And for GBP JPY, I was thinking that this is a UTAD, right? I was thinking that this is a UTAD. Now this kind of disproved it a tad bit, but I still feel like we have all of this liquidity back here, right? So we have all this liquidity here, and then we have this very simple, easy to understand um, liquidity void, right? And because we have this liquidity void, I'm immediately thinking, well, this is all liquidity, and this is also a price magnet. And this is liquidity, and this is also a price magnet. More than likely, we're going to be inclined to see a bearish scenario here. So what I'm thinking is very, very likely we're going to see distribution over the next, couple hours in London. Now, does that match up with our GA? Yes, because here we can see, that it's distributing back into a buy perspective. Now, remember, these are all individuals, right? These are all individuals of one, different component. So if GJ is buying, that doesn't necessarily mean that, GA will be selling. Okay. So GBPs, even though they're related, they're not the exact same thing. With that mindset in mind, I think that if we go down to the lower time frames, more than likely we may see some distribution here. So we see, this take off the higher time frames. Now let's see if we go to the 3-minute and if we see something different. If you're willing to look at a stock chart, could you look at is that Peloton? Yeah, let me actually pop it up for you. Let me get rid of US oil. I don't need it. Yeah, Peloton. I figured. I was looking at that stock a while back too. Let me go over GJ first, and then I'll go over Peloton. All right. So firstly, on the 3-minute, I am thinking that this is distribution, right? Because we have the established range. We have the established range. We have, the upward expansion before the distribution. So I think that's classic. But let's actually shift it a little bit upward. Yeah, there we go. So what I think is we have one or two options, right? We could continue on bullish by taking this, the 50% of this inefficiency, right, or a lower time frame order block, and then just completely blowing out these highs. The other option would be that it distributes, right? So it goes below, and then it continues going back up for it to actually, make a proper distribution. Now here for the sell entry, it's kind of difficult to say that, but I think it would be around here. It would most likely be around there. What you can also do is you can also fib it. If you're having trouble with it, just fib it, right? So if you're having trouble with it, let's see where price goes. And when it starts retracing, we can try to measure out the 79 or the 88.6, right? And then from there, we can take the sell off of those entries. That's also the very simple optimal trade entry, right? So here, I definitely do think that this price magnet is going to be expressed, meaning that it's going to come back down and take this. But at the same time, I can't be certain right now. First of all, it hasn't even hit midnight yet, which would be the true new day, right? And from there, I would like to see where price is going at that point. But more than likely, I would like to see something like this. I'd like to see something like that. So it'd be around 77 pips, not bad. I think we can even, extend our stop loss a little bit, around 6 pips, right? And I still think, the 1 to 12 risk reward ratio is pretty good. I think Thursday it will happen. Yeah. I really don't think. I think tomorrow there's going to be a lot of volatility in a lot of other pairs, but GJ looks like it's still ranging. So for me, I think GJ will be a little bit of a slow burner, in my opinion. That's just me. I may be wrong. I may be completely wrong. Now, let's see. Yeah, so this was GJ. Now let's look over USD CAD. Actually, they said that they didn't need USD CAD, right? Anymore. Well, it just formed an order block here. It actually took the 50% of this order block, created its own order block. So now from there, I think that maybe it takes liquidity here, and then it comes back and takes it again. Yeah, which would line up to the dollar, right? Yeah, so it goes lower, takes the order block, goes higher again. Goes lower, and retraces back. There's not much to see there, but yeah. I actually wanted to call a sell for it earlier, and it would be deep in profit if I would have, but unfortunately I didn't, so it's all right. But either way, let's go to Peloton really quickly. And let's start off with the 4-hour tendency. So 4-hour tendency, it's been bullish since March, right? So that's when the pandemic started. Peloton took off because of the in-home gym type spiel that they had going on. So last 4 hours, we have seen some movement. We haven't seen a ton of movement in January. More so since the new year, we've seen mostly bullish potential. So really quickly, I'm going to make a PDF on this, but I want to kind of sneak peek it right now. What happens with stocks? Usually January is a lot of consolidation, but it's mostly bullish. February, March, usually bullish. Now, when we start getting to March, April starts being consolidation. May starts being consolidation, and then that's when we enter the mid-year kind of stagnation, because that's when the market kind of just it goes up and down. It starts fluctuating. That's where a lot of people lose a lot of money because they don't know how to trade, right? However, at the end of the year, around October, bullish tendency picks up again. You guys can backtest it this year. It happened this year too, right? When it happened in March, March actually happens to be a month of consolidation. So that's usually where March is usually where April and May are decided. So whatever the tendency is in March, usually April and May will follow, which we saw that did happen, right? Um, in this case, and I take this data from the 20-year bond, right? From the 20-year bond chart, which shows seasonal tendency, right? Now, if we actually look at Peloton, there's a good time to buy, or like what actual price action is going on. Right here, we see some liquidity pool forming, right? But I also think more than likely, oh, this would have been a nice breaker, but it's not a breaker, unfortunately. It didn't break previous low, so that's not a breaker. I would have been inclined to say it was if I would have scrolled out, but no, it's not. So what do I see here? See that this order block got taken. So this is a very good example for you to put to your notes, Michael. It is a very, very good example to put to your notes. Here's the 50% of the order block failed, and then taken, right? From there, we see a 50% of the inefficiency filled, taken, right? So 50% of this inefficient candle, boom, taken, right? So this is all classic price action. There's no surprises here. 50%. Oh, I would have been barely missed, but we should always account for spread. So for me personally, I would have probably gotten in because accounting for spread, right? And then from there, we would have ridden this high all the way up here. What happens at this point? Does it break a previous low? It does not. So this whole move is not a breaker. In that case, it retests previous structure and then it continues upward. It shows some willingness to continue going up. Does this show some willingness to continue rising? I'd like to keep that into consideration. I wouldn't trade it right now because there is some institutional support and resistance going on here. Now that does exist, and I'm yet to teach that to you guys, but the is support and resistance in the sense that retail uses it isn't how you truly use it. There are certain figures and numbers, right, that the market will use as floors or ceilings. We should not consider them as floors or ceilings because you will more than likely never have conclusive proof that that is a floor or a ceiling that a bank uses, right? But because of that, we could also see how previous structure reacts to these certain zones. In this case, i.e. this example, right? So if we actually zoom in a little bit lower, we go to the 1 hour, Some may be inclined to say this is an order block. I don't see it. I don't quite see it there. I think that would be the initiative of a range, right? So let's see how it reacts here tomorrow. If it goes below, we can completely discard this and look for bearish entry, or we could look for a bullish entry off of this zone or off of other zones to see what happens afterward. But I would look at how it reacts around this area, and then from there either I would also wait and see if it establishes the range, right, and actually takes form of distribution or accumulation here. But for now, I think that actually let's look on a little bit lower time frames. Let's see what's up. Humor me really quickly. So this is the origin of a move. And we do have some willingness to go higher. This was an efficient rise, so there's no reason for banks to really go below, is there? Well, it definitely was efficient. You see how this trend line happened and then boom. So this is a great example. You guys see this? How trend line, boom, takes, and then it keeps going up. That's exactly what's going to happen in the market in the next few days. So here, I even think, actually, actually, this may be a good idea to use the 78, the 79.88.6 because it actually went into our kill zone and it started rejecting offward. Lower price action tells me that more than likely it's going to fill in this gap. Let's see how it opens tomorrow at 9. Okay. If it opens lower, I'd be very inclined to go bullish. If it opens higher, watch it. Just kind of worry about it a little bit because if it opens lower, that means that banks and institutions wanted a lower entry. If it opens higher, that means that more than likely they're already expressing their profits, right? And they closed. And yesterday, today they actually closed with prices already scaling in for a buy. So me personally, I think that it should go up, but I would watch to establish the range first. And watch tomorrow's open. Does that answer your questions, Michael? I hope that helped. All right, no problem, man. Next, so next and last, I actually have to cut this class a little bit short because I'm being called for a leadership meeting. But let's take a quick look at gold. Actually, end this off on a great note. All right. Why did gold not load? Okay. Oh, let's get on it now. So, what ended up happening here? Oh, interesting. Oh, was that the entry that we got? Yeah, it was. It was the entry that we got. And it actually ended up a little bit lower than we expected. All right, well, let's reanalyze the market. Oh, this actually looks nice. This looks like reaccumulation to me. This may also look like redistribution to some, and I wouldn't blame them for that, actually. I was planning to sell off of 1943 earlier. So around this area, yeah, they would have sold off there and then it would have gone higher. So from here, I'm thinking we establish a range here. I'm thinking we establish this range. A lot of people are going to be selling because of support and resistance, right? They're going to be selling here. Now there is a liquidity void above. There's actually various liquidity voids above it. But I think this liquidity void, meaning it being a price magnet, I think is going to be extremely useful for us to actually analyze later on. So I think that here we may just as well get an entry off of this position. Now, if we go on lower time frames and scale in, let's see what's up. It's so large. I don't like it. Yeah, so this candle. Okay. So there's two options that we have. Here, this whole order block here could be one of our entries, right? This whole order block could be one of our entries. Meaning, all of this. I think I would only go for the 50% of it. I wouldn't go for anything higher, simply because of the risk factor involved. There you go. I'd only go for about that. However, to also consider that, we could also consider this wick, right? And this inefficient candle, we could say that the same thing happened here, right? The same thing happened there. We got somewhat of a reaction, and then it rated stops, and then it continued lower. I think what may happen here is we may see the exact same thing that happened here, right? Meaning we get a slight reaction and then it continues lower. And I actually think this may be redistribution rather than accumulation. So all of this may, have been the UTAD, and this may have been the sign of weakness. And then from there, we're going to come back up, touch equal highs, and then sell it, right? That's just speculation. I don't see a clear entry off of this. Yeah, I don't quite see a clear entry off of this. You could make an argument for this, but I definitely don't agree with it. So I'm thinking we wait and see what's going on, because tomorrow is a big USD day, right? Tomorrow is a big USD day that we're gonna want to more than likely either sit on our hands or just sit on the market, right? Because we don't want to risk our money unnecessarily. So personally, I think hold off on gold for tomorrow. That's going to be my analysis. Just hold off on gold, because gold may move many, many, many different ways because of the inauguration. So yeah, guys, I'm going to go ahead and cut the call now. If you guys have any questions that you guys would like to ask about the call, please drop them in the chat. I'm going to be there for a while still. And yeah, thank you guys so much for coming.